In this presentation, we will set up vendors and beginning balance for vendors within QuickBooks Pro 2020, QuickBooks Desktop 2020. So in other words, the vendors are people that we will owe money to. That's who we purchase from. We're setting up a new QuickBooks file. We want to set up not only the vendor, but also the opening balance as we start the new company QuickBooks file that is owed to us at the point in time that we start the new file. Here we are in our Get Great Guitars file. We have the open windows open. You can open the open windows by selecting the view dropdown and selecting the open windows list. We're going to be setting up the vendors. That's going to be in the first section of our home tab. The vendors are who we purchase from and then we pay off. So typically they're going to be the people that we are paying. This is the people that the money is going out for. The money is going out. Oftentimes we will be setting up vendors as we make things such as checks and bills. For example, if we were to open up a check and then we were to pay somebody, we could then select the vendor section here and we could then add, and this wouldn't be the actual payment, this would be adding AP going up and then we would pay them with a check. Same thing within a check, however. You can add the new vendor here and go from there to add the new vendor. Now, because this is a new company file, however, we want to add the new vendor and we want to add the beginning balances. In other words, we're thinking, okay, we have a new company file. We need to set up the balance sheet accounts. Our goal here then is to set up the balance sheet account, the opening balance for it, and who we owe to. So let's take a look at the balance sheet to consider that. We're going to go up top to the reports. We're going to go to the company and financial. We're going to go down to the balance sheet. And we are going to be working in 2020. So I'm going to say 12/31/20. 12/31/2020, or actually let's say at the beginning of the year would be 01/01/20. So January 1st, 2020. We want to have on the books at this point in time the fact that we owe somebody money in the opening balance in the equity section. It's going to be $15,000 that's owed to Epiphone. Therefore, in the accounts payable section down here, we don't have one yet. We have to add the opening balance to the accounts payable. Then we also have to know who we owe. So this needs to be supported by the backup sheet for the vendors, which is going to be some type of vendor balance detail. So within the vendor balance detail, we want to know who we're going to owe that $15,000 to. That's what we'll set up now. Now we could go to the home tab. I'm going to go back to the home tab in the open windows. We could go to the vendor section here. I tend to like to go to the vendor section by going to the drop-down menu up top and vendor. This is something we could do no matter what window is open at the current time. So we're going to go to the vendor center, similar process as we did when we entered the customer. You'll note we have one vendor already because we had to collect property tax and we'll be paying the property tax, and we set up that vendor here. Now notice we have a transaction here at $27.50. There actually shouldn't be a transaction, and they're one of our invoices that we were testing. We actually recorded. I'm going to go back in and adjust that now, and we'll see an example of basically adjusting a transaction. We can actually delete transactions within QuickBooks, something we cannot do oftentimes with other software. You want to be careful doing that, but it is something that's possible to do that. I'm going to go to the balance sheet in the open windows. You'll note we have the sales tax payable, the $27.50. If we double click on that, we're going to auto zoom. Now the dates up top are in 2020. I want to bring it back to the prior year. So this first date, I'm going to bring this back by saying 2019 to 2020. There's our transaction. So we have the $27.50 in 12/31/19. Again, if you can't see it, it's probably a date thing up top. Then we're going to go and double click on that $27.50, and there is our transaction. This is a test invoice we recorded, or I recorded, and I was just basically checking it out or taking a look at how the invoice would be created. So what we want to do is delete this invoice. What we're going to do is we can go up top. We're in the main menu section. You see the delete item here. We're going to go ahead and just simply delete the item. It's going to say, are you sure you want to delete it? And we're going to say, yes, okay. Delete that item, close that back out, and now we're closed out. So we'll close this out again. You want to be careful to delete transactions. It would be better to basically reverse them or issue a memo for them, but it is something you can do in QuickBooks. So there that is. We're going to go back to the vendor center. And you'll note now that we're back to 0 with our only vendor to the tax collector. We had to set this up in order to set up the sales tax. Now we're going to set up another vendor, which will be Epiphone. That's who we're going to be purchasing our guitars from. So we purchased guitars in the past. We still owe Epiphone as of the start of the business. Same kind of concept as with the customer center. If we select the drop down for the new vendor, we could select a new vendor here or add multiple vendors. We only have one this time, therefore we're going to add the one new vendor. So we're going to go into the new vendor, again, very similar to the customer section, and we're just going to type in the vendor, which is going to be Epiphone. That's who we buy our guitars from, Epiphone. And you can see, of course, the tabs on the left. We have the address information, the payment, the tax setting, the account settings, and the additional information. Now, the vendors, of course, we want to set up all this information that's going to be necessary for the current vendor, especially the ones that we do a lot of business with, like the large vendors, like the people we purchase our inventory from, such as Epiphone here for us as we purchase the guitars from them. However, many vendors, we're not going to probably need to populate as much of this field. For example, if we pay the utility bill or the phone bill, we probably don't need to know what their main phone number is and their mobile number and their fax number and even their address typically. We might want to put that in there, but it's probably something as we set up the vendors, which is not as important as when we think of the customers, because obviously we want to be in contact with the customers, be able to set them up and give them our newsletters and all that kind of thing. So here it may not be as important then to fill out a lot of the other activities. As we add new vendors, what we'll do is use the quick add feature in order to add them. Our primary goal here is to put in the beginning balance. Like with the customer beginning balance, you really only want to use this field when you're setting up the accounts. After that, you really don't want to be using the beginning balance field at all after that point in time. So that's what we're doing here. So we're going to set up the 15,000. Note as we do that, that's going to mean that we owe Epiphone. That's going to increase the accounts payable by that 15,000. QuickBooks is then going to have to put the other side somewhere. It's going to have to put the other side to some area. And when you're thinking about accounts payable, QuickBooks thinks of the other side of the accounts payable account as driven by a bill, typically. So QuickBooks might create a bill then, and the other side then you would think to go to some kind of expense account, which is going to mess up the temporary accounts because this is something that happened in a prior period, and we would like it to go to an equity account, really. However, if we set the date once again to 12/31/19 prior to the current year we are working in, 2020, then as of the end of the current year, it'll roll into the 2020 and it will then be in the equity section. So it won't be a problem at that point in time. So that's what we want to do. We want to do that. Otherwise, if it's in the current year, the temporary accounts, the income statement accounts will be off and we'll have to make an adjustment to move what QuickBooks does to it to the equity section. We'll see an example of that when we take a look at the reports. This is going to be Epiphone. Now I'm just going to tab through the rest of the fields. I'm not going to populate the rest of the fields. Notice this is all you really need, and for many of the vendors it's all you're going to have because you don't need to populate all this stuff. So we have the job title, we have the main phone number, the email, the work email, the mobile, the website, and so on and so forth. Might be necessary to have the billing, billed from, and the shipped from. Could be nice to be populating those items. I'm not going to here. And then we've got the payment settings. We have the account number, the credit limit and payment terms, billing rate, and so on. We have the tax setting, vendor tax ID, vendor eligible for a 1099. Now, if we were to set up the 1099s, 1099s is going to be a tax form that we would have to provide to certain types of individuals or companies, typically sole proprietors. So if they're not incorporated typically, and we pay them over a certain dollar amount, which is pretty low, like $600, we would have to 1099 them. And a 1099, you can think of it kind of like a W-2 for people that aren't employees, but that we pay, like contractors that we pay. So we don't have to go through all the tedium of withholding or anything like that. But the IRS wants to report they want us to tell them, hey, if you want the expense here, you have to tell us who you paid so that we can go after them and get the income on the other side, because any expense to us is income to somebody else. If they are incorporated, we don't have to do that typically because the IRS thinks that they have a good enough control over the corporate entities to keep them in compliance with their tax. However, if it's an individual who is not incorporated, the IRS wants us to, regulate and kind of report that, and that's going to be the 1099 form. Here, we're going to say Epiphone is a corporation, don't need to 1099 them, therefore we're not going to select that out. Notice also that this will only help us to generate the report. It'll help us possibly to generate a report to show who we paid during the year, to help us to kind of think about who needs to be issued a 1099 at the end of the year. Then we have the accounting settings. We're not going to populate anything here. And then we have the additional information. So back up to the address information, I'm going to say OK. So we'll say OK. And there we have that. There's the $15,000 for Epiphone. Now let's go to the reports and see what happens with regards to the reports. We have the balance sheet still open in the open windows. I'm going to go back over to the balance sheet, and we see now in the accounts payable, we have the $15,000. Again, if you have anything other than $15,000, it's probably like what I told you to do in a prior presentation, was to post something to it when I was using it as an example. And therefore, you can go into any transaction from this setting. Note, as we go, you want to basically check these accounts each time in the balance sheet accounts, tie them out to what we have here. Whatever is different, you can adjust. This is both the great thing about QuickBooks and kind of the curse about QuickBooks. Other accounting software will not typically let you delete things, or at least you have to override the system to do that because it kind of deletes the paper trail. We'd rather have you basically enter something and then reverse it with another transaction as opposed to simply deleting something. However, of course, deleting something is the most straightforward and easy thing to do to clean it up. And when you're learning QuickBooks, it can be a good tool to basically go back and be able to clean things up. So notice you can always go from the end point here back to the detail by double clicking on the item. So if we're in accounts payable, for example, I could double click on accounts payable, and here's going to be the information for it. Notice we cannot see anything again because we entered it as of last year, the end of last year. So I'm going to say 12/31/19, and there's the transaction. So there's the $15,000 in the prior transaction. Notice what QuickBooks created. They created a bill, because when we put anything into accounts payable, it will create the form that will drive the transaction within QuickBooks. Accounts payable going up is driven by a bill. So notice if we double click then on this, we will see the bill that QuickBooks created. And you're going to say, well, I didn't enter a bill. We entered the opening balance. Well, QuickBooks used the form that it thinks is related to. It is related to within QuickBooks. The increase in accounts payable, that's a bill. So here's the bill. Where did they put the other side? Uncategorized expense. So accounts payable went up, uncategorized expense is the other side. So if we close this back out, I'm going to say no. And so notice down here, that other side is in essence equity. It's been rolled out into the equity. But if I go to the prior time period, 12/31/19 last year, the year that we entered it, 12/31/19. Now, when I refresh this equity is going to change to net income, right? Net income. So it's fine that it's in there in net income as of last year, because again, the cutoff for us is to say, hey, last year is in another accounting system. Yeah, we have some stuff there from last year in this accounting system, but that's just to set up the current system as of the cutoff date, as of what we're going to start on, which is going to be January 1st, 2020. So in other words, if we were to then take a look at the profit and loss for last year, we'll see this $5,500, which kind of messes things up. It's not correct, but it will roll into equity as of the current year and therefore be correct. So let's take a look at that. We're going to go to the reports up top. We're going to go to the company and financial profit and loss type report. Let's change the dates. I'm selecting tab from 01/01/19 to 12/31/19. There we have it. Now we have the uncategorized income. That's because when we set up the customers, we have those. Now we have these uncategorized expenses of the 15,000. The difference between the two there is, of course, that 5,500. Again, this whole thing is not necessarily correct because our point here was to set up the balance sheet accounts as of the beginning time period. If we set up these balance sheet accounts as of the current time period, let's say we entered the opening balance as of January 1st, 2020, we would have a problem because it would be distorting the income. Like, in other words, if we reported this income on our taxes last year and then we set up the beginning balances here, it would be double reporting. It would show up again on the temporary income statement accounts. However, because we set it before the time period, if we roll into the current time period, which is 12/31/19, or let's say 01/01/19 to 12/31/19, let's do that one more time. We want to go 01/01/20 to 12/31/19 So January 1st to December 31st, 2020, the current year, there's nothing there, and there shouldn't be, because all we're doing is setting up the beginning balances. So again, if you're starting at the middle of the year and you have to enter the beginning balances into the current year that you are in, such as 01/01/19, 12/31/19, you would then need to go back in and do a journal entry to clean out this uncategorized income and uncategorized expenses to the equity section. And you'd have to record a journal entry. We don't need to here because we entered it in the prior period, and it'll simply roll into equity at the close or at the end of the year, making the beginning balances correct as of the start of the period. Okay, so next thing we want to take a look at, if we go back up to the balance sheet, you'll note then we have this 5,500 we note that we have the 15,000 that is owed to accounts payable. The other thing we need to determine is who we owe that money to, the vendor that we owe that money to. To determine that, or the backup or supporting report for it is going to be in the reports dropdown, vendors and payables, and we're going to go to the accounts payable. Let's go to the vendor balance detail. And so there we have that. Obviously, we only have the one vendor. So the one vendor is Epiphone. There is the bill that's owed to Epiphone. There's the 15,000. The 15,000 here is supporting the balance that's going to be on the balance sheet. So if we were someone was to ask us, how much money do we owe people? We look at the balance sheet. We say we owe them 15,000. Then they ask us, well, who do we owe them to? We go to the vendor balance detail and say, well, we owe them to the Epiphone, the vendor of Epiphone.